Welcome back, everyone. There are 4 different types of charting methods you can use. Today, I'm going to break them down, talk about the pros and cons of each, and the number 1 chart type I think you should be using. Hey, everyone, be sure to like, share, subscribe, ring that bell to be notified as soon as we drop a new video. You know, I mention it all the time, but we do so much on the channel. I want you to especially be subscribed and ring that bell. We're putting out, sometimes 2 videos a day, ton of content, all timely. So that's the biggest reason, ring that bell. And then you're looking to take your trading to the next level, definitely check out the Steady Trade team. I'm a lead trainer with StocksToTrade, Tim Bohen. The Steady Trade team is a small mentorship group where we really get in depth. These videos are awesome. I hope you take advantage of everything on the channel, but they're 5 to 7, sometimes 10-minute videos. You can only get in so in depth. In the Steady Trade team, we really get into the nitty-gritty with twice daily webinars. Click the link below, check it out. All right, the 4 main types of charts we're going to break down. We're going to start with line charts. And I think line charts are great if you've got a very long-term, kind of time frame. If you're investing for years, I think line charts are valuable. They can show a trend. You can see the stock, BFRI is going to be the one I use as an example. You can see it recently started trading. You can see it recently had a big spike a couple weeks ago, pulled back, and is now trending up and getting ready to break over that high. But all you see with line charts are the day open and the day close. So you can see the high, you can see the low, but you don't see intraday, which is very important for day trading and much less important if you're longer term. Listen, if you're long-term investing, it can quite frequently just be noise to know the high of the day and the low of the day, because if you're trend following, big fan of trend following, check out Michael Covell. He's a friend of mine. Got some great books. But if you're trend following, you're actually looking for, and this may sound weird, less information. You don't necessarily care about crazy spikes because of a news announcement or an earnings announcement. You're trying to follow that trend. And line charts, I think, are the great way to do that. A lot of the charts I'm going to talk about next are more intraday and give you a lot more information that you can interpret as a day trade. But long-term investing, I think they can get a little noisy and offer too much information. So that being said, line charts, in my opinion, only good for investing, not a day trade charting, not even a swing trade charting. But if you're looking to hold in your IRA, make those type of trades, I think they can be useful, and really that's the only use for them. Beyond that, once you're going into shorter time frames, you need to look at intraday charts. So the next one I'm going to talk about are bar charts. And bar charts I do think are awesome. I don't necessarily use them myself because I'm going to finish on candlesticks. Most of you guys and gals are probably here to talk Japanese candlesticks. You probably knew this coming. I'm going to finish with Japanese candlesticks because they're my favorites. But bar charts, very similar, just a different method. So you can see, you see the high of the day. The open of the day is on the left. The close is on the right. You can see where the stock opened, where it closed. You can see the high of the day. You can see the low of the day. So this big candle, you can see on this big gap up, stock gapped up to 606, went as high as 750, and then it closed down at 550, and the low of the day was 479. So you can see how with the bar chart versus the line chart, a lot more information. And ultimately, notice how with that line chart, in my opinion, you could see the trend a little better. Now, I get it. You can probably kind of tell higher highs, higher lows in that trend, but way clearer on the line chart when you're talking trend following. But the bar charts give you that open, that close, the daily range, and then you can see, if it's red, the stock closed lower than it opened. If it's a green bar, the stock closed higher than it opened. So you can see All of that information there, once you learn these patterns, or not these patterns, these charting methods, you can see how you can quickly read all of that information in a matter of seconds. Once you know what the red means, what the left bar means, what the right bar means, etc. The last or third to last is Heikin-Ashi. Okay, so these are different, slightly different from Japanese candlesticks. It's just a different visualization method. Ultimately, you still see the high, you still see the close, you still see the wicks. You've got solid bodies and hollow bodies, but I don't like them. Even out of all my charting, or out of all the charting possibilities, Heikin-Ashi are my least favorite. And again, it's just a personal taste, in my opinion, because they give you the same information that the bar chart does, and then I'm going to finish with the Japanese candlesticks. But it's just a different look and feel. It's kind of like, I like red cars and you like blue cars, okay? So you get the high, you get the low, open body, hollow body, but I just don't like the looks. Let's finish on my favorite, and I think the best. And pretty much everyone agrees. When you're talking day trading, only a small subset use bar charts or use Heikin-Ashi. And there's other charting methods out there that are even more obscure. There's point and figure. I mean, there's a lot of point and figure. If you want to go old school, check those out. But there's a lot of different methodologies. But if there's very few things day traders agree on, short-term traders agree on, but 99% of people think you should be using Japanese candlesticks. And it's just the best method. It's just the clearest looking. And especially if you're learning, if you're watching webinars, if you're getting books, if you're jumping on YouTube, you're going to find, again, 99% of people use Japanese candlesticks. I think you should be using the same charting that you're learning from. You'll see me always running. So let's break down the candles. So when you've got a red candle, it's going to be different than when you've got a green candle. So let's start with this same candle I keep going over, or the same day I keep mentioning. So you can see it's a red candle. So when you've got a red candle, you know that the top of the body is the open price. So the 9:30 open is the top of the body. So again, opened at 6. And then the bottom of the body on a red candle would be the 4 p.m. close. Then the top wick would be the highest point the stock went on the day, and then the bottom wick of the candle would be the lowest point of the day. Then, next day, big green candle. So if it's a green candle, you know that this stock gapped up to 7 and then closed at 790. Now, how do you know that? It's because it's a green candle. If it's a green candle, you know the bottom of the body is the open and the top is the close. Then wicks are the same. Wicks show you the intraday high as well as the intraday low. Now that being said, let's jump over to the intraday and I can show you the same type idea. So depending on the time frame, I like 5-minute candles intraday. You can see the same thing. So whether we're talking daily or 1 minute or 5 minute or 1 hour, every candle represents the open of that time frame, the close of the time frame, and then the high of the low intermediary of that particular time period, 5 minute in this case. So you can see the stock like at, let's look at this 10:15 candle. So you can see it gapped up to at 10:15 a.m. to $7. It ran as high as 7:30. Then that candle closed at 7:27. Next candle, another green candle. Got a little wiki there. Look at that big pullback to VWAP. Actually, let's look at the 1 minute candle to see that. So you see that big pullback and then reclaims VWAP, and then you can see the trend continuing higher. So now we're looking at a 1 minute. Again, red candles mean it closed lower than it opened. Green candles mean it closed higher than it opened. And then the last thing, and this applies for all the charting platforms, is the volume candles. And this is something I get asked about a lot. A lot of people ask, well, why are some volume candles green and some volume candles red? Great question, very often misunderstood. understand that the candle, the volume candle, I mean, this is just a bar chart at the end of the day that's showing you how many shares traded in that time period. So that 1015 candle traded 400,000 shares, 395,000. Okay. And it's green because the price candle was green. So the volume candles, it doesn't mean higher volume or lower volume. You got to do that mentally. You can see the next candles. Let me jump over to 5 minutes to make it a little clearer. You can see that then that next candle was lower volume, but a green candle. Okay. The reason it's green is, notice the price action candle is green. So that trips up a lot of people. They're like, well, wait a minute. The volume was lower from 1015 to 1025. Why does the candle go from red to green? It matches up with your price action candles. So, all right. Drop me a comment. I'm guessing 99% of you use Japanese candlesticks. If you don't, definitely check them out. And then I think probably 1% of you use bars. If I had to, like, if you forced me to change to a different charting methodology, I would go to bar charts. I do like them. I just don't like them as much as Japanese candlesticks. So drop me a candle. Drop me a candle. Hey, you know, it's the Christmas season. Maybe head on down to Yankee Candle and send me a candle too. So anyway, drop me a comment as to what charting platform you prefer. And as always, check out the StocksToTrade team. Would love to work with you.